Alrighty, what's going on everybody? So today we are going to be discussing the Ichimoku Cloud. I get a lot of questions on this all the time because you all constantly see me use it in my day-to-day analysis. This is just one of the tools that I like to incorporate in my analysis, but it is a good skill to learn. It might not be the right choice for you. If you're going to be trading off of this by itself, you have to keep in mind that this was made a very long time ago. I'm not going to get into so much in terms of like the history and the origins of it. I will discuss a little bit about how the different lines on this indicator are actually calculated and stuff like that. For those of you that want to know, but I'm only going to be going over that real briefly. And I really want to talk about the different ways that you can use this as part of your trading strategy. So if you're new to the channel, make sure that you smash the like and subscribe button so that you don't miss out on any of my future videos, tutorials, analysis, or anything like that. And if you are a returning subscriber, thank you very much for all of the love and support. Let's go ahead and get right into the charts. So the very first thing that you're going to want to do is come up here on TradingView and click indicators. I already have mine favorited over here. So I actually use a modified one. This is the original, and this is one that was made by Jesse Feinberg. He's also known as Darth Crypto. The reason why I like using this is because there's also a few EMA lines on here. So if you actually just come up here, if you don't have it favorited and you just type IchEMA, IchEMA, it'll come up right here. So you can see it's a pretty popular one too. So I really like using this one. Props to him for making this and combining a couple extra indicators with it. For those of you that are using the free version of TradingView, this is going to help a lot, especially if you want to keep those moving averages and stuff. So I go ahead and use this one. And this is what it looks like by default when you put it on the screen. So we're going to go ahead and we're actually going to take off these moving averages. We're not going to be discussing those today. And just kind of general settings that I use for this. If I'm trading stocks or if I'm trading any kind of traditional commodity or foreign exchange or something like that, you do not mess with the settings at all. Now, Jesse, when he created this, this was specifically for crypto. So the inputs are already changed to crypto. But if you're using the traditional Ichimoku Cloud, these are going to be different. It's going to be, I think, 926, like 52 or something like that. And then another 26 or 12 or something down here. That's because stocks and stuff are not 24/7, right? So since Bitcoin is 24/7, you have to kind of adjust these a little bit. And these are the correct settings: 20, 60, 120, and 30. Okay. And then obviously in this indicator, since he's got the EMAs, you can change those here. I normally do 50, 100, and 200 just to keep it simple. Don't need to mess with the colors or anything too much. Everything else on here is pretty much okay. So that's pretty much what the Ichimoku looks like. Now, I normally end up turning our Senku span A and B off. They're just not really necessary. Those are just the lines that actually create these clouds that you can see. Let's go down to a 1 hour and you can see it a little better. These clouds that are in the background, those are just the lines that create those. You don't really need them there. I normally take those off. But anyway, so this is what it looks like. And we're going to go ahead and we're going to break this down piece by piece because this is a lot, especially if you've never used this before. It looks very complicated and it's actually really not all of that complicated. So I said I was going to go over the calculations and stuff, but before I do that, I kind of have to explain to you how this whole system works, okay? There's a couple different ways to be trading off of this. This is a really good tool for beginners because this is going to teach you a lot of discipline, okay? So we've got a lot of different lines here, right? We've got our Chiku span, which is also just called the lagging span. You've got a blue line here, you've got a red line here. So what are these lines, right? So the blue line is known as the Tenkan-sen. That's also known as the baseline. And then you have your Kijun-sen, which is our red line here. And that's also known as the conversion line. And then you've got your green line, which is your Chiku span, or as everybody else calls it, the lagging span. So why would you want a lagging span that's basically just mimicking the price a certain amount of candles before, and just shifting the price line over? So if you actually take this and you turn it into a line, you can actually see that this is the exact same as the price action. It's just shifted over slightly. So why would we want something like that? Well, the reason why is because it goes into the trading rules that are associated with Ichimoku Cloud. Okay. And one of those rules is that you don't want to trade at all unless you don't want to get into a long unless this Chico span is above the price act, the current price action. Okay. And you don't want to get into a short unless it's below the current price action. Right. So you would have been looking, this is probably where you would have exited longs, right? You would start exiting around here, or potentially you would have been holding until maybe around here after it bounced when your TK lines crossed. So that's another thing. So let's go ahead and just break this down one by one, right? So let's actually do the lagging span last. Our conversion line, the Tenkan-sen line, that is drawn with this calculation. So it is 9 bars minus the price high plus 9 bars minus the price low divided by 2. So that's what this is. And then the baseline is calculated. It's just 26 periods minus the period high plus 26 periods minus the period low, okay, divided by 2. So that's how these two lines are calculated. And obviously, it's a slightly different. These are the traditional mathematics. These are just adjusted for crypto settings, obviously, and that's what draws these lines here. So there's a couple of ways to be looking at these. Now, I like to use these as support and resistance. This whole indicator is kind of like an all-in-one. You can use it for support and resistance. You can use it as a baseline. You can use it as a reversal indicator. You can use it as an entry or an exit indicator. It's kind of an all-in-one system here, but trading off of it alone is not recommended because it's not going to be having you get into and out of very many trades, especially if you're only trading a few pairings. And this is really reliable on the higher time frames. I want to say probably the 1 hour and above. Normally, I haven't had very much success with this on, like the 5 minute, 1 minute, 15-minute chart. There's just so much price action that these lines, they just go crazy. Like there's not really any clear trend that's going on because Bitcoin is really volatile. So it's constantly going up and down. So this is normally something that's going to work a lot better on higher time frames like this. So one way to trade this is trading the TK crosses. So that's when the Tenkan-sen and the Kijun-sen lines cross, as you can see here. So we had a TK cross here. That was a signal to be entering into a long. That obviously would have been a massive winner. And then this is pretty much where you would have exited. Now, that can work when, something is going parabolic like this. This isn't going to work when you have a lot of chop like this. Like this would have been really bad. This basically would have had you shorting the bottom. That would have been a big loser. And then this is basically where your exit would have been. I guess it would have had you shorting here pretty much, like after the trend already reversed. So that would not have been too great at all. So that is one way to trade this, but again, you need more confirmation and stuff in order to be able to get into and out of these trades. So another rule that goes along with this is the rule about the clouds. So let's turn on our cloud background here, right? So this cloud is drawn. There's an additional, 30 bars or whatever of cloud in front of this. Now, why is that useful? That is useful because Ichimoku basically says that if the cloud is green in front of the price action, then you should only be looking for longs. If the cloud is red in front of the price action, wow, which it hasn't been for a very long time, then you should only be looking for shorts. Okay. So the cloud turned red here. Okay. So this would have been time to be starting to enter into shorts. As you can see, obviously there was a massive downtrend here. Cloud was red, cloud was red, cloud was red. So you would have been in and out of short positions all through here until probably here. When the cloud turned green, this is where you would have started looking for longs and accumulating. And just in general, though, this probably would have been a no trade zone just because you're in and out of the cloud so much. Now, the price action is very important in this. When the price action is above the cloud, that's when you want to be looking for longs. When it's below the cloud, that's when you want to be looking for shorts. That's kind of how the Ichimoku span works as well. Your Ichimoku span is kind of like your confirmation indicator. So let's go ahead and turn that on real quick as well, and I'll show you what I mean. Come on. Okay, so this would have been your confirmation right here. The cloud was red in front of you. And when this line fell below the price action, that's confirmation that you should be looking and be laddering in shorts. Okay. Now, in here, this would have been sketchy because you still had a red cloud in front of you, but the price action broke above. So this, you probably would have waited to enter short until after the price action dipped back below the cloud. Ichimoku span was below the price action's below the cloud. Those are confirmations to be entering into shorts. That would have been a pretty successful trade. Same thing like over here. You get price action. It ends up breaking above the cloud. The Ichimoku span is above the price action. The price action is above the cloud. And you have a bullish TK setup here after it crossed. This would have been basically your entry on that. And this would have ran for a long time. This would have ran. You pretty much would have held on to this the entire time because the cloud is basically your continuation indicator. So you would have been holding through all of this. And yeah, that would have been a massive winner. You would have gotten in here at just under $11,000. And obviously we all know Bitcoin now is at, $36,000. So that would have been a ridiculous winner. So there's a couple different ways to trade this, but in general, you do not make a trade when the price action is trading inside the cloud. You do not enter into a short position if the Ichimoku span is trading above the price action. You do not enter a short unless the Ichimoku span is trading below the price action and the price action is below the cloud. And that's pretty much it. Those are the basic rules of Ichimoku Cloud. It is definitely looks like it's a really confusing indicator, and I can kind of understand that, especially for newer traders and stuff like that aren't really familiar with this. It does look complicated, but like I just explained, it's really not that hard to understand. The rules are very set in stone. They're very solid. And like I mentioned, this is going to, especially with newer traders, this is going to promote a lot of discipline, and it teaches you discipline, and you have clear invalidation levels if you're combining this with levels of support and resistance as well. I'll put a link in the top corner for my tutorial on support and resistance lines, how to draw them, how to use them, and stuff like that. So with all that said, that's pretty much how the Ichimoku Cloud works. This is how I use it on a daily basis. I basically use it as major support and resistance zones, normally in a massive uptrend. And you can actually see this pretty much the entire way up here, especially on the daily chart. I love using Ichimoku on the daily chart. It gives you a very, very clear idea of what the current price action is. It's fantastic. This pretty much would have been your last entry here, basically right here. That would have been your last entry. Yeah, same thing, about 11,300. So you would have just gotten in $300 later. So fantastic. That would have been a fantastic trade. That was actually one of my spot buys that was one of my last spot buys of 2020. So you can see on the way up here, the Ichimoku Cloud, the entire time, the price action has been using our blue line, our baseline, as massive support the entire time. I actually just made a 90-second analysis on my Twitter. All the links, by the way, for all this stuff are down in the description. I did a 90-second analysis today, basically saying that, hey, guess what? If we see price action close below our baseline here, chances are we're going to be coming down here to about $29,000 to be retesting our other line here. So you've got your Tenkan and your Kijin. Normally, if your Tenkan Sen line does not hold, normally you come down and you test your Kijin Sen line. So just be aware of that. If that line fell, we would have probably a massive downtrend here and see at least like probably double tap our previous all-time high at $20,000. But we're not really doing this video as an analysis video. So that's kind of the power of Ichimoku. There are a lot of really awesome things about this indicator. One of them is just the fact that it is almost an all-inclusive system. So you've got your entry confirmation, multiple confirmations for entries and exits. You've got continuation indicators in the form of the TK lines as well as the cloud. So there's like kind of like an all-in-one indicator system here that really teaches discipline. And I really like this. It's definitely taught me a lot of discipline with my trades, especially combining it with other forms of analysis and having those clear invalidation levels for your trades so that you're not leaving underwater trades open for too long and getting yourself into some hot water. All right, guys, that's about it for today. I hope that you enjoyed the video. I hope that this was helpful for you as usual. All my DMs and stuff like that, you can get a hold of me on Discord. If you guys have questions, leave them down in the comments below. Let me know what you think about this indicator as well. Is this something that you use? Is this something that you're going to experiment or work into your analysis? Let me know down in the comments below. And before you go, make sure that you smash that like and subscribe button so that you don't miss out on any future tutorials or analysis that I do. With all that said, I hope you guys have a wonderful week and happy trading.